Hi guys, there are your typical newspapers and outlets that provide us with what's happening around the world. And we know that they have their left-wing or right-wing biases, which, while problematic, we all tend to understand and readjust our view to what they're actually telling us. However, there are other platforms and papers whose job is to provide information to a particular section of society or industry, and for them it's paramount that what they're saying is unbiased and as correct as possible. Their reputation is on the line. That's why we should, when it comes to stories about business or economics, we should look to the likes of the FT or Bloomberg, as it's their job to provide information to industry or investors. So when it comes to post-Brexit Britain, what Bloomberg has to say isn't pretty.
Investors say the UK is uninvestable, a warning on higher taxes and news about King Charles III coronation. An eclectic mix today. Now, welcome to Thursday's London Rush. The UK is uninvestable because of UK government chaos. That's according to strategist Joachim Clement at investment bank Liberum. Now, the feedback we get from investors is that they consider the UK uninvestable as long as there's such government chaos. Now, Liz Truss's wild first month saw policies and U-turns that resulted in £300 billion being wiped from the nation's stock and bond market. Other investors see the disorder as an opportunity because shares have become cheap. That's according, for example, to Aberdeen's head of investment. She says that's the feedback she's been hearing from investors. Now, meanwhile, we have a deep dive into the atmosphere at the most chaotic Tory conference that anyone there can remember. A foreign diplomat, who also attended Labour's conference last month, said it was like witnessing a total inversion in British politics. Check that out on Bloomberg UK. In the meantime, the IFS says millions more Britons will be pulled into higher income tax brackets over the next 3 years, costing workers twice as much as the amount that the government is cutting from income taxes. Elsewhere, HSBC says UK bond markets face a potential cliff edge when the Bank of England exits the market at the end of next week, leaving traders essentially without a buyer of last resort. Now, longer-term gilt yields are already starting to creep higher. Finally, in royal news, King Charles III is expected to be crowned on Saturday, June the 3rd next year. Now, we understand that the ceremony will be at Westminster Abbey, but the coronation widely reported to be smaller, a more modest version of earlier ceremonies.
Okay, so that was very interesting. And of course, she brought up 2 points here, mentioned 2 particular words here, uninvestable and chaos. So the chaos of the last month has, and we have to put Brexit into this mix as well, because since Brexit, investment in the UK has declined. But over the last month, it has been really hit. And to describe the UK as uninvestable is very serious. Why? Because of the chaos of Liz Truss's government. Now, she also mentioned how the Bank of England is there's a potential cliff edge when it comes to the bond market, because what's been happening over the last few weeks is the Bank of England has been pumping money into the bond market by buying up all these gilts, which has maintained a balance, or at least kept investors somewhat happy or less concerned. When that ends, then what's going to happen? Will the bond market be hit once again? There's a real risk that that's going to happen. As she said here, there would be no buyer of last resort. Also interesting, she said here about the royal ceremony being downsized. Obviously, that's maybe a political decision. Look, we better not have some massive pomp and ceremony while people are struggling to pay their bills and feed their families. That's not going to create a good atmosphere in society. Yes, it's a once-off, but it probably is not a good idea to just dump a whole load of money into this while many people are struggling. But as I said at the beginning, these are the newspapers who are telling you the truth about economics and about investment. She said here how because share prices had dropped, that meant some people are going to come in and buy up a lot of shares. So that's something also to remember when you're going to hear the likes of John Redwood or other Tories online talking about how, yeah, look, investment is going up. Share prices in these companies are increasing. Yes, because the share price has dropped, and you're finding vulture capitalists come in and buy the shares at a very low price. That's not showing a true feeling that the company is doing well, but they're buying up these cheap shares and in order to sell them off later and make a profit. Once again, these are the companies, these are the outlets who are saying things are not good. Ignore the politicians and listen to the experts. Let me know in the comment section, guys, what you think about all of this. As always, your comments are greatly appreciated. Thanks a lot.